So we're going to combine the last two objectives in one video here, one relatively short video. So first we're going to look at the adjusting and closing entries for a merchandiser. So we learned adjusting entries in chapter 3 and closing entries in chapter 4. We're going to do all the same adjusting and closing entries, but if we're a merchandiser, we have a little bit extra that we need to include. So for our closing entries, when we close revenue, we're going to debit sales revenue, but we also want to debit that sales discounts forfeited account. Remember, that is an interest revenue account, so it needs to get closed out also. And when I credit all of my expenses, I want to not forget to credit delivery expense, which is probably a new expense, and cost of goods sold. Cost of goods sold is the one we tend to forget because it doesn't end in the word expense, but I want to make sure that I close that out as well. You'll also have that adjusting entry to record the estimate of the sales returns and the estimate of the refund payable. Now, the last part we're going to look at is go back and look at that multi-step income statement. So we briefly looked at it in Learning Objective 1, but we're going to go back and look at it in a much greater detail now. So we talked about the single step income statement just lists all revenues together and then all expenses, and then revenues minus expenses gives us net income. If we're a service provider, that is the appropriate income statement. But if we are a merchandiser, then it is more appropriate for us to use this multi-step income statement. So remember, when we look at our income statement, first of all, remember our three-line heading, the company name, the name of the statement, and then the date. The income statement is always for a year or a period of time. It doesn't have to be a year, but it's always for a period of time. So first we're going to list our revenues. Now, this would be our sales revenue, and if we had service revenue also, like we're a company that does both, then we would have sales revenue and service revenue listed in this first column here, and then we would put the total in the second column. Remember, the totals don't mean debits and credits, they mean individual amounts, totals and subtotals. We only had sales revenue here, so that was our total, so we went ahead and put that in the second column. Now, I mentioned earlier it does say net sales revenue, and I said that I would come back to that. Since the revenue is reported minus the estimated discounts and minus the estimated sales returns, it is called net. So really, net sales revenue is equal to sales revenue minus sales discounts minus sales returns. So we recorded the discounts up front. We recorded the sales at the net amount. So that is the net sales revenue. We also recorded, we didn't really go over this, and that's okay. I'm not going to expect you to do it, but I just want you to know that we recorded that estimate of sales returns. We took those out of sales revenue. So this net sales revenue is the discounted, the net amount. So we had net sales revenue plus the sales discounts forfeited. And that gives us, we've already looked at some of these, but I want to point it out again. So notice that we start off with the three-line heading, the company name, the name of the statement, and the date. The income statement is always for a period of time. In this case, it's for the year ended, but it's could be for a quarter ended or month ended or week ended. So we start off with net sales revenue. Now let me say, if we're a company that have both sales revenue and service revenue, we do both, then we would list both sales revenue and service revenue in this first column. Remember, the columns don't mean debit and credit, so the first column is where we put our individual amounts. The second column is where we put our totals and subtotals. So we would put the individual amounts in the first column and the total in the second column. Now, I want to point out that it does say net sales revenue. This net sales revenue means that the revenue is already recorded at the net amount. In other words, the discount has already been taken out. So net means anytime we see the word net, we should automatically think subtract. Something's been subtracted. In this case, the sales discounts have already been subtracted out of the sales revenue account. So we started off with net sales revenue. Since we didn't have any service revenue, net sales revenue was the total. That goes in the second column or the total column. Then I put cost of goods sold, and I'm going to go ahead and draw my parentheses in there to remind me that I'm subtracting cost of goods sold. So net sales revenue minus cost of goods sold gives me gross profit. So then I'm going to list my operating expenses. Now, your operating expenses are all of the things that you think of as normal day-to-day operating expenses. So it's salaries, it's rent, it's depreciation, it's the delivery expense, it's the utilities, it's insurance, it's supplies, it's all of those normal day-to-day expenses. Now you'll notice here that they split these into selling expenses and administrative expenses. That's going to become very important when you get to Accounting 2302 next semester in managerial accounting. So right now, as long as you get all your expenses in the right category, I'm pretty happy. You don't necessarily have to split them into selling and administrative, but if you wanted to, it is kind of customary to do that. So we have all of our operating expenses. We total those up. We put the total in the second column. Again, I'm going to put my parentheses around here because gross profit minus total operating expenses gives me operating income. You'll also hear this called income from operations or income from continuing operations. Now, a lot of times this is where we stop. This is all we have. And so we just stop here. But it is possible to have other items. And if you can see me now, I'm putting other in kind of air quotes, right? Other items. Other means non-operating, things that are outside our normal operations. So there's a couple of things that routinely fall under non-operating, other income and expenses. You'll also hear this called other revenues and expenses. One thing that is other always is interest. Whether it is interest expense, such as we see here, or whether it is interest revenue, such as our sales discounts forfeited, which is an interest revenue account. All interest is an other item. Another thing that we'll commonly see down here in this other item are what we call gains or losses. Now we'll talk about these a lot more when we get to chapter 9, but essentially what these are is, let's say that you have a piece of equipment. You have property, plant, and equipment. Could be a building, could be equipment, could be furniture, anything like that. Anything that gets depreciated, and we sell that equipment. If we sell that equipment or that building or that whatever for more than book value, we'll have a gain. If we sell it for less than book value, we'll have a loss. All gains and losses from sales of plants assets go down here in the other section. So these are gains or losses from the sale of plant assets. Again, we'll talk about those a lot more in chapter 9, but suffice it to say, if it's a revenue account, like an interest revenue or a gain, we'll add it, so we'll treat it as a positive number. If it's an expense, like interest expense, or it's a loss, then we'll put parentheses around it and treat it as a negative number. So revenues and gains minus expenses and losses gives us our total other items. If revenues and gains exceed expenses and losses, then this total is a positive number. In this case, the revenues and gains were less than the expenses and losses, so the total is a negative number, but you just add those numbers up. So operating income, in this case, minus the other items, gives me income before taxes. Then we subtract out our income taxes, and that gives us our overall net income. Now, again, a couple of things that I wanted to point out. Gross profit, and you can fill these in your notes. We looked at this in Learning Objective 1. Gross profit is so super important. You really do have to know this one. If you ever listen to analysts on TV talk about company earnings, guarantee that gross profit's a number that they're going to be looking at. So net sales revenue minus cost of goods sold. Our operating expenses, we sometimes, often break into selling and administrative. Then operating income is gross profit minus those operating expenses. Then we get those other items. Again, anything that's outside of the normal day-to-day. Always gains or losses on the sale of plant assets is always an other item, as is interest expense and interest revenue, such as that sales discounts forfeited. And then we have our income tax expense, whether it's federal and or state income tax.